G'day, good evening, and how you doing? It's John Seville from Acorn Wealth, and this is your executive summary for stock setups for Wednesday, the 20th of April. So let's have a quick look at the S&P. We mentioned we broke an open range to the upside yesterday, so we continued up today. Not a very bullish candle, but up nevertheless on stronger volume. The big thing I'm looking at, again, as I mentioned the other day, is this 2120 area, and I was reviewing the S&P's movement in Trading Room tonight. And obviously there's a lot of resistance at 2120. One of the things that I'm interested in is seeing if we possibly, because I mentioned when we broke down out of this rising wedge that we were no longer in momentum of any sort. We're consolidating. We're going back and forth over the moving averages. So the moving averages don't matter right now in terms of the pattern that we see here. Now, if we look at what we're then seeing, one moment here. Okay, yeah, if we look at this, what we may be seeing is a possible head and shoulder here. Left shoulder, head, right shoulder, and then a break. So the bear argument is that we've broken out of an upward channel. Upward channels normally break down unless we're dealing with a head and shoulders. So that's kind of the top-down type of analysis that would lead me to believe that that could be what's occurring. Now, we've also got divergent money flow as well as we make these upward movements. So that's another thing to consider. Now, nevertheless, open range suggests that we should close above this level by next Friday. So that doesn't mean that we can't hit 2120 and close down right at 2080 for the new open range of May, and then break down, do another head and shoulder, and then break. So there's a few things that could happen, but it looks like a possible head and shoulder building. Anyway, so that's kind of the looking at what the markets may be doing. We'll still keep our bullish outlook, but obviously we're still happy to be holding on to shorts that are doing well. In terms of looking at some of the stocks, obviously Hekla, again, massive day. Obviously we talked about the $3.50 June 2017 calls a couple of weeks ago. Those are up from 35 cents to I think 85 or 90 cents today. That which is amazing. I mean, those are calls that are 8 months away that are up about 200%. So that is awesome for anyone holding that. Now we may get a pullback to around the 38.2 Fibonacci, 360, 365. We did talk about that being a possible re-entry point to pick up some, to add to the position or look at an entry if you're not already in. I'm not in. I'll be looking at some possible calls there tomorrow for, again, the 350 June 2017 calls. And if we do get a pullback to that support around here, which is at the 38.2 Fibonacci, which I've measured by looking at the drop all the way from back here. Okay, so that's on the move. Now let's go to CEQP. Okay, so CEQP was the next one we talked about really briefly earlier. Yesterday, sorry. It is coming up to breakout territory. And you can see that it's just about to poke through potentially. So it's make or break time for CEQP. Looking to move up into that $14 range. But as I mentioned in Trading Room, I wouldn't be too worried about that $14 range. It may just keep moving, and we could actually get as high as about 16, I'd say even 16.43. So I would just raise the stop loss if it breaks out and let the thing continue to move. Because if the market continues to be bullish, I'd let it stop out on its own on a pullback. But I would set a target at the low of this candle, which is 16.02. So I'd say 15.73. I'd move the target to. Last couple of things. ARL, and I do have one new alert for you, but ARLZ, strong. I bought a bunch of calls in it as per the executive summary last night. This one's looking really good. Had a great performance today. Perfect bump and run formation, fallen angel formation, and a cup and handle formation. All the things you're looking for. That's great. B-Core also moving great today. That's rounded out, broke through. This should easily start to rally if it breaks through the 50-day resistance tomorrow. You can see the 50-day moving average is just on top, and the money flow has gone positive for the first time since the stock was, what's that? $15. Remember, we're only at 569. So B Corp could be an easy run up to that $7 plus target we talked about last night. So B Corp is looking good. And THC also hit the entry criteria today that we discussed last night in the executive summary. And obviously looking at those 32.50 May calls for a quick rally up towards the $36 price. Now the only new one, AAPL. This is a very speculative play, and it's based on earnings. Apple, as far as we can see, has no one's really upgrading their phones. Most people, including myself, are still on the 5. In fact, well beyond the 6 being released, I still request a 5. I like it better. I don't want to pay for an upgrade to what I can't really see is more than anything to a bigger screen. So people are waiting for the 7. The watch is a flop. And I don't think earnings are going to be great. The fact we've had a big move in the market and Apple hasn't moved really moved at all, other than down, says something. So we were looking at a possible poor earnings next week. They report on Monday, and could get down as far as 100, and Strath thinks 96, 95. So kind of around this 96 area where that gap started from. So we were looking at the April 29th puts, which expire at the end of next week. And those $102 puts are currently $1. So if it's a big surprise on the earnings for Apple, there could be some good money to be made. So that is but remember, that is a highly speculative play. It could expire completely worthless. So this is the kind of strategy where we only invest what we're willing to lose. I gave the example here in Trading Room tonight. If you trade a $10,000 account, and let's say you follow the 2% rule, you're never willing to risk more than $200. Well, then you would only put $200 in a play like this. Just to give you some examples, of course, it's up to you. But for tonight, that's John Seville. And if you are not a full-fledged member of our Gold membership yet and getting these alerts every day in Trading Room, Tuesday, Thursdays, it's well worth a try. We've got lots of activity coming up. Simply follow the link in your email and give it a go for gold. $9 for the month, and we'll see you all in the next summary. Take care.